Nitish, I'm just muting you for 2 minutes.
Okay.
Yeah. Nitish, I'm just muting you for 2 minutes.
Okay.
Okay, we can begin now. It's 4 p.m. Hopefully, many people have joined in, and it's good that we are keeping this every quarterly now. From the last event that we had, it was pretty fruitful. Just okay, I believe people are having some sort of technical issue in joining the SRE Lounge page because I think some people are not able to enter into their website. But I think most of everyone has joined, and I don't think that should be an issue as such. So we'll give it around 5 more minutes, and I'll just see what's going on. Okay, I think we can continue now, and so yeah, let's begin. So thank you everyone for joining in, and it's been great. The last quarter also we had a very good market outlook event in during Diwali, and it was quite fruitful because there was a lot of information that was given by our research team, Mr. And our research head, Mr. Nitesh Chand, who has been so active in giving us all our Telegram calls and all the technical calls and all the fundamental calls that we've been getting on the Telegram app. And all those people who are not on it, please, I request everyone to get on that app. It's very good. We have a very good hit ratio there, and it's been fruitful for many clients, and they have made a lot of money through the calls that the research has been giving. Also, I would like to tell everyone very specifically that this seminar today is solely for educational purpose. It is not advising anything strongly in terms of buying stocks or selling stocks. Everything that is going to be told to you today is only and only for education purposes, and it will definitely be beneficial for all of you all. And if you all have any other further queries that you want to get sorted out in terms of specificality, you can feel free to get in touch with me or with our research team, and we can run you through all of that. That won't be an issue. So, without any other further distractions or any add-ons, I would like to invite Mr. Nitesh Chand to continue with this and take it forward.
Thank you, Akash. Good evening, everyone. Wishing all a very happy and prosperous new year. Before we start, as Mr. Akash has already mentioned the disclaimer, but once again, I would like to put it in a very simple way. See that this webinar is only and only for information purpose. This information and data sharing is with you for the purpose, or the only reason is to help you in decision making. This webinar is not any webinar to give you any recommendation, and it should not be considered as any recommendation for buy, sell, or hold. So this webinar is only for the information and data sharing purpose. Okay. With new year, it's the beginning of new decade also. In the decade ahead, many of us would be retiring from jobs. Children would be completing their studies, getting settled in their respective professions and business. The decade ahead would throw many challenges, and to overcome those challenges, we would require funds. And investment is the only way to prepare for the future funds requirement. Last year was very eventful. Life and markets both were very volatile. Let's see how market performed in last year and what lies ahead. In almost all my presentation, I present this particular slide, and the very good reason for me presenting these slides almost in every presentation is to prove that equity markets are the best place to invest. No other asset class matches the return delivered by the equity market or say Sensex. Let's see. The Sensex started in the year 1979. 1979 was the base year. The year-end closing of Sensex was 119. 119. 10 years down the line, in the year 1989, the closing was 779, almost 7 times. Then again, 10 years down the line, 99, the year-end closing was 5,006. 2009 closing 17,465, and the latest 2019 closing was 41,254. Now, in this span of 40 years, index has delivered return of 16% CAGR. No other asset class Absolutely no other asset class matches this performance and this rate of return. And if we add 1.5% dividend yield of the indices, so then this return would become 17 plus percent. So this proves over long term, in long run, equities and only equities are the best investment instrument. If we see in the performance of 40 years, this the year 1989 to 99 was the one of the worst period Indian economy can see. Whether if we consider it political front, business front, whatever it was, and war, all the situations were witnessed. But then also from 1989 to 99, everything was discounted and market moved up. 92, 91, 92, we have to pledge our gold, then unstable government, then everything in the year 99, we have Kargil war. So everything got factored in, and then also market kept on moving. So this proves that no other asset class matches the return delivered by the equity market. Now, coming to last year's performance. Year 2020 started with the level of Nifty being at the level of 12,130. Then in 3 months time, market corrected very sharply, and the fall was to the extent of 38% from the level of 12,000 plus. Indices Nifty touched the low of 7,511 in span of 2.5 months. And in December 2020, we are we have crossed the previous high of 12,000 plus levels. Sharp up move of 86%, more than 85% from the lows visited in the month of March, 7,500 to 13,900. To be precise, 14,000 was also breached. So it was a sharp up move. In history of Indian market, this sort of correction and up move was never witnessed, never ever in the history. This is the sharpest fall and the sharpest recovery. तो हमको ये देखना है कि ये सिचुएशन भी अराइज होता है कि जहां पे मार्केट ने शार्प करेक्शन विटनेस किया एंड वहां से अप मूव भी आया. नाउ अब ये जो फॉर्मेशन हुआ है, व्हाट डज दिस मीन, व्हाट डज दिस इंडिकेट? लेट्स सी कि हाउ एंड व्हाट आर थिंग्स लाइज अहेड फॉर अस इन द फ्यूचर. The top performing sectors of year 2020 were pharma, IT, chemicals, cement, and the bottom performing sectors, the sectors which were worst performers: energy, financial services, banks, private banks, PSU. These were the top and worst performing sectors. Now coming to the top performing stocks of the Nifty, DV's Lab. From the level of 1800, it made a high of, it closed at a level of 3,842, absolute return of 111%. Dr. Reddy, again, the performance was super, and the return was 81% from the level of 2,900 roughly to 5,200. Cipla, again from the farmers pack, 476 to 820, 72% absolute return. Infi from the level of 737 to 1256. Again, HCL Tech from the IT pack from 570 to 946, return of 65%. Now, the worst performing stocks of the Nifty. UPL from 588 to 466, negative return of 20%. ONGC 127 to 93, minus 27%. IOC negative 28%, 126 to 91. Coal India from the level of 212 to 135, minus 36% return. Basically, most of the PSUs were underperformer, and they underperformed by drastic margin. IndusInd Bank from the private bank category from the level of 1500 to 895. This 895 after recovery. Otherwise, it was much lower. In the month of March, April, the lows were very deep, below 400. So after recovery, the absolute negative return for the year is 40%. So basically, this was this snapshot of how Nifty performed, best performing and worst performing stocks of the Nifty. Now, the sector which was very high flyer for the entire decade, from the 2010 to 2020, the Bank Nifty was the strongest performer, one of the strongest performing indices. In the year 2020, Nifty appeared to be a underperformer. In the beginning, the Nifty was at Bank Nifty was at level of 32,200. It corrected sharply, it corrected more severely than Nifty. The correction was to the extent of 47% from the peak. From 32,000 levels, it made a low of 19,429. Sharp correction of 47%. But in the recovery phase, the entire loss was not recovered. Nifty, on the other hand, from the lows, it it recovered the levels which was there in the month of January, and even it is 10%, 12% higher from the previous high. So this shows that the strength is there in Nifty, but Bank Nifty, which was star performer for the entire decade, is slowly appears to be losing the steam. Recovery of 61%, whereas Nifty has recovered more. Now, in spite of lockdown, GDP decline, slowdown in economy, and all other negative factors, market have moved up and only moved up very sharply, and the upward move was mainly driven by the FIS flow. Liquidity was the main reason why market moved up. Foreign fund flow have been strongest in the last 5 to 6 years. Let's see how the fund flow have been. From the year 2008, this is the calendar year flow, not the financial year flow. In the year 2008, there was negative. The FIS has withdrawn over 1 lakh crore rupees. In the year 2009, the absolute positive deployment was 24,000 crores, roughly 25,000 crores, 24,820 crores. In the year 2010, the FI flow was 61,000 crore, and so on. From 2015 onwards, the FIF started withdrawing money, and the withdrawing was continued till 2018. From 2019 onwards, the positive flow started, and in the year 2019, the positive flow, the inflow from FI was roughly 40,000 crores, whereas in the year 2020, calendar year 2020, the flow was 65,000 crore plus. This indicates that for last 5 years, last 5 to 6 years, this year have been the calendar year of 2020 have been the strongest in the terms of FI's inflow. इतना पैसा आया है एफआईएस की तरफ से जिसके कारण मार्केट ने सब चीज को डिस्काउंट कर दिया है वैल्यूएशन ओवरबॉट जोन एवरीथिंग गॉट डिस्काउंटेड एंड मार्केट still moving up, and the main reason why market is moving up because of this liquidity, and liquidity is coming when these stocks are getting purchased, so market keeps on moving up, and we don't know how long this inflow will continue. Now we come to, let's see how Sensex has performed in the last 40 years in terms of calendar year closing. This may help in the decision making process because we are always scared. हमारे मन में हमेशा डर रहता है कि मार्केट अगर कहीं नीचे बंद आ गया, मार्केट कहीं नेगेटिव क्लोजिंग आ गया. हमने 10 years का चार्ट देखा 79 to 89, 99, 2009 and 2019. In the span of 10 years, market have always moved up. Market हमेशा ऊपर की तरफ मूव किया है. अगर हम 10 साल के टाइम फ्रेम में देखें, उसी को अगर हम देखते हैं कि लास्ट 41 इयर्स में 79 से जो सेंसेक्स स्टार्ट हुआ है, जिसमें 41 इयर्स में क्या रहा है मार्केट का परफॉर्मेंस ऑन द ईयरली क्लोजिंग बेसिस, कैलेंडर ईयर के क्लोजिंग बेसिस पे क्या परफॉर्मेंस रहा है। टोटल 41 years. Out of this 41 years, 30 years Sensex have given positive closing. 41 years में से 30 years Sensex ने positive closing दी है on calendar year closing basis. This means कि 73% of the time since the start of Sensex market positive close लिया है. Only 11 times, 11 years in last 41 years, market have taken the negative close. This means the risk-reward ratio is always in favor of the investor. 73% chances, historically अगर ये indicate कर रहा है कि 73% of the time market ऊपर closing ले रहा है yearly basis पे, तो जो risk-reward ratio है ये फेवर में चले जाता है इन्वेस्टर के कि वो एक पॉजिटिव रिटर्न जनरेट कर सकते हैं ऑफ फ्रॉम देयर इन्वेस्टमेंट, प्रोवाइडेड दैट देयर इन्वेस्टमेंट इज इन द क्वालिटी स्टॉक्स. Now coming to the very important part, value stock and growth stock. The decade ahead may witness some change in the approach towards growth and value stocks. Now, what are these value stock and growth stocks? ये value stock and growth stocks होते क्या है actually में? Let's see. Value stocks. Value stocks are classified as companies that are currently trading below what they are really worth and have strong probability to outperform the broader market. Basically, value stocks वो stocks होते हैं कि जो अपने fair value से या फिर जो value उनको मिलनी चाहिए उससे lower price पे वो trade कर रहे हैं. इस कैटेगरी में मोस्टली PSU stocks qualify करते हैं. PSU stocks are considered as the value stocks. What are the growth stocks? Growth stocks are those companies that are considered to have potential to outperform the broader market over the time because of their future potential. ग्रोथ स्टॉक्स वो स्टॉक्स होते हैं कि जिनमें एक ग्रोथ विजिबल है, जो विजिबल ग्रोथ है से 10% 15% ग्रोथ उनमें विजिबल है एंड मार्केट इनको इन कैटेगरी ऑफ स्टॉक्स को एक प्रीमियम देता है. दिस स्टॉक्स कमांड से प्रीमियम. एग्जांपल अगर हम देखेंगे तो एचडीएफसी बैंक, पिडिलाइट, HUL एंड बहुत से ऐसे स्टॉक्स हैं जैसे बजाज फाइनेंस जो ग्रोथ स्टॉक्स की कैटेगरी में आते हैं. दे ट्रेड एट द प्रीमियम as compared to their peers. Now, if we go back, say 20 years back, the decade of 2000 to 2010, this was the decade where most of the value stocks were star performers like PSU stocks and metal sector stocks. They were the star performers. इस पीरियड में जो भी PSU, फॉर एग्जांपल सेल का प्राइस जो था वो 20 रुपीज से 300 रुपीज हो गया था. तो इस तरीके से जो PSU स्टॉक्स थे एंड मेटल सेक्टर के स्टॉक्स से ये स्ट्रॉन्ग परफॉर्मर थे. दे स्ट्रॉन्ग परफॉर्मर्स और इनमें एक बहुत स्ट्रॉन्ग ग्रोथ देखने को मिला था. इनके प्राइस एप्रिसिएशन बहुत शार्प था. Now coming to the decade of 2010 to 2020, the growth stocks in this decade, the growth stocks took the driving seat. इस समय जो स्टॉक्स आए थे ये टोटली चेंज हो गए थे फ्रॉम ग्रोथ स्टॉक्स from value stocks to growth stocks. Growth stocks like Bajaj Finance, HUL, Pidilite, ये स्टॉक्स जो थे ये ड्राइविंग सीट पे आ गए और इनका जो परफॉर्मेंस था ये बहुत ही स्ट्रांग हुआ था. एंड now globally the value stocks have underperformed the growth stocks over the past decade. However, value stocks have now started seeing a pickup. A key driver for the outperformance of growth over value have been the steady decline in interest rate over the past few years. The reason, ये reason क्या था कि जिसके कारण value stocks की जगह growth stocks ने front seat लिया. The reason was कि the interest rate decline होने लगा and capital becomes easy access to the cheap capital. Now this is the chart of the value versus growth stocks. In the year 2010, both growth and value stocks were at par at the level of say 100 rupees was given valuation to the value stocks, and that time the 100 rupees valuation was given to the growth stocks as well. In the year 2050, the ratio changed from 1 to 0.79. Hence, instead of 100 rupees, now the value stocks were given valuation of 79 rupees. And by the year 2020, the value stocks came down by 50% as compared to the valuation of the growth stocks. जहां पे वैल्यू स्टॉक्स को 52 रुपीस वैल्यूएशन दिया जा रहा था, वहीं पे ग्रोथ स्टॉक्स को 100 रुपीस का वैल्यूएशन दिया जा रहा था. नाउ दिस सिनेरियो स्लोली अपीयर्स टू बी चेंजिंग, जहां पे ग्रोथ स्टॉक्स में वैल्यू स्टॉक्स में फिर से एक अपटिक दिखने लगा है. Now let's see the performance of two index stocks which changed from value stocks to growth stocks. In the year 1999, the year-end closing was 214 rupees. I am not telling the name of the stock as of now. The closing price was 214. After 10 years, the closing price was 265. The December end closing of 2009 was 265. From 214 to 265 in a span of 10 years. The absolute return was 24%, CAGR with CAGR of 2%. Now, this stock was considered as value stock in this decade. And once there was change of decade from year 2009 to 2020, the stock became a star performer, and from 265, it delivered a return of 881% absolute with CAGR of 26%. Can anybody tell the name of the stock? The stock is Hindustan Unilever, HUL. For first 10 years, in last 2 decades, for first 10 years, the stock was absolutely non-performer. It underperformed by all means and delivered a poor return. Whereas in the next 10 years, from 2009 to 2020, the return was amazing, supernatural, absolute return of 881% with CAGR of 26%. Now coming to the second stock. The second stock is in the similar line. From the 10 years, the return of this stock was from December 2007 to December 2017, from the price level of 721. In 10 years time, there was absolute return of only 200 rupees, 721 to 921, return of 28%, CAGR of 2%. In 10 years, the CAGR was only 2%, whereas in next 3 years, stock delivered return of 117% and with CAGR of 29%. In the year 2020, this stock contributed 20% to the Nifty up move. Nifty and Sensex up move में इस stock का contribution 20% था. So this means the stocks can change from growth to value and value to growth. So we have to be very careful कि हम ऐसा ना करें. We should not be in a position कि हम अगर कोई non performing stock है from index. I am talking from index perspective, not generalized कि mid cap and small cap की बात नहीं. Index में if some stock is underperformer, it may happen कि in near future, say in next 5 to 10 years, the stock may become supernatural performer. And this stock, which contributed more than 20% to the index in the year 2020, was Reliance. First 10 years, 2007 to 2017, it was absolutely non-performer. The holdings in mutual funds were relatively less. So, but in last 3 years, supernatural return and 20% contribution to the Nifty and Sensex. Now, which are the stocks which have potential to become growth stock from value stock? Again, I am repeating that this is not a recommendation. This is just an idea. I am sharing you a data which may help in your decision making. The potential value stocks which may become growth stock in future: ITC, L&T, NTPC, Power Grid, Tata Steel, GAIL. So these are the six stocks which have potential to become growth stock because these stocks have real value with them, and it's just matter of time that that market may start giving the true valuation and the stock prices may start improving. But again, I am repeating, this is not a recommendation. We can have a revisit the stock list: ITC, L&T, NTPC, Power Grid, Tata Steel, and GAIL. See, technically, how Nifty moved from the lows. This was the March low, and from this point onward, if we see from starting, this is year 2017. From 2017, it took almost 3 years to reach from the level of 8,000 to 11,000 plus. And then a span of 3 months, market was down back to the level of 7,500. And from this 7,500, we have one-sided up move. Here you can see one black candle. This black candle is the only month which got negative close. Rest all other months are having positive close. And this in span of 9 months from the low of 7,500, we have reached the level of 14,000. So this one-sided up move have created enough room for correction. Now coming to the valuation part, whether the Nifty is fairly valued, expensive or highly valued. The highest price to earning ratio in the year 2000 was 27.4. The tech bubble time, the time of tech bubble, the P ratio, the peak P ratio was 27.4. In the year 2008-9, it became 27.6. And then we started crossing all those previous higher P levels, 28, 30, 33, and currently we are trading about the PE of 38. By any standard, by any means, this is very expensive. This is highly stressed valuation, and this is very tough to sustain. This level was last seen this year, ये 38, 35, 38 ये levels जो हमने last देखा था, that was in the period of 1992 Hasan Mehta's time, कि जहाँ पे peace were not considered, and then we know what has happened. उसके बाद जिस तरीके का fall आया था, that was very severe. So now if we see technically and fundamentally on both the front, markets are very highly overbought, highly expensive. So this creates room for correction. Now, what is the threat going forward? Fundamentally, the valuations of market are stressed and are on higher side with PE of 38. Technically, one-way up move from lows have created decent room for correction. Over 85% up move from lows without any meaningful correction. Means 85% from the level of 7,500 in Nifty to level of 14,000. 85% in one stretch without any meaningful correction. Indices have sound reason both fundamentally and technically to undergo serious price erosion like we have seen in the past. इस तरह का जब फॉर्मेशन होता है तो ये रूम क्रिएट करता है, हम चाहे उसको जो भी टर्मिनोलॉजी दे दें, करेक्शन हो, प्रॉफिट बुकिंग हो या फिर टाइम करेक्शन हो, बट समथिंग में अनफोल्ड एंड वी हैव टू बी रेडी फॉर दैट फॉल. वी शुड बी रेडी क्योंकि फंडामेंटली वैल्यूएशंस बहुत स्ट्रेस्ड हैं, टेक्निकली मार्केट ऑलमोस्ट ओवरबॉट कंडीशन पे है. सो दिस हैज क्रिएटेड वेरी डिसेंट रूम फॉर प्राइस करेक्शन एंड सीवियर प्राइस करेक्शन. It's tough to take the exact call ki when this correction will come, but something may unfold. We don't know what, but something may come, and market, it will give the reason for the market to correct to to a reasonable extent, so that the valuations and जो overbought position है, this may get over. जो वैल्यूएशंस वेरी स्ट्रेस्ड है ये करेक्ट हो जाएंगे, जो ओवरबॉट कंडीशंस है इसको भी करेक्ट होना है. देन मार्केट विल क्रिएट बेस फॉर द नेक्स्ट राउंड ऑफ अप मूव. नाउ इफ द करेक्शन कम्स, व्हाट इज द अपॉर्चुनिटी? जब करेक्शन आता है तो ही हमको अपॉर्चुनिटी मिलती है. इफ वी सी those investors जिन्होंने इन्वेस्ट किया in the month of March and April, they are really minting money. They have made money and serious money. So we have to be prepared for the correction to grab the opportunity. जो correction आएगा उसके लिए हमको prepare होना है. Unless and until we start planning for those correction and to take the opportunity of those correction, we won't be able to do it. So we have to plan meticulously and take the benefit of the correction. Price correction provides opportunity to acquire stocks at reasonable valuation and price. In the event of correction, better to create a diversified portfolio rather than having few stocks or sector specific. Whenever the correction comes, it should not be like this कि we are focusing only on selected stocks. Like many of the clients with whom I am interacting, उनका ये व्यू है कि बैंकिंग में करेक्शन आया है, इसमें अभी तक अपमूव नहीं आया है, तो हमको बैंकिंग स्टॉक्स में फोकस करना चाहिए. इट बिकम्स एब्सोल्युटली रॉन्ग. इट मे हैपन कि बैंकिंग स्टॉक्स ने बैंक इंडेक्स ने लास्ट 10 इयर्स में एक सुपरनेचुरल एक स्ट्रॉन्ग परफॉर्मेंस डिलीवर किया था. हो सकता है कि आगे आने वाले 3 to 5 इयर्स में ये अंडर परफॉर्मर रहे. इट मे नॉट आउट परफॉर्म द ब्रॉडर मार्केट. तो इसलिए कॉन्सेंट्रेशन से बेटर रहेगा कि स्टॉक स्पेसिफिक रहे एंड डाइवर्सिफाइड रहे. दिस विल गिव बेटर रिटर्न एज कंपेयर टू द कॉन्सेंट्रेटेड पोर्टफोलियो. Stock specific approach delivers better return as compared to the sector concentrated. Now, जो correction आता है, the correction is both time wise and price wise. It is never, ये history में, as I said earlier, कि this was first time in the history कि when we have seen vertical fall and vertical rise. 2 months में correction to the extent of 40% and in next 8-9 months up move to the extent of 85%. Generally ऐसा होता नहीं है. This happened because of the liquidity, pure and pure liquidity driven rally thing. Otherwise, if we see historical correction, whether it was 2008, year 2000 or 92, the correction was both time and price based. 2008 correction in Nifty, the fall in Nifty started from the level of 6,144. In the first leg, the correction was of 27% from 6,144 to 4,503. And then after up move of 16% from 4,503 to 5,228, up move of 16%. And then again from the level of 5,000, it came down by another 27% from 5,000 to 3,800. And then again up move of 21% from 3,817 to 4,620. And then the final leg of correction in the month of October, 44%. And then the up move. So in the entire move, the correction was to the extent of 58%. 58% was the correction, but it was spread over a period of 10 months. So whatever correction which we are contemplating, it may come, उसके लिए हमको prepared रहना है. It should not be like this कि in the first leg of correction we are deploying all our funds and in the next round of sell off or in the next round of correction we don't have the funds. So इसलिए प्रिपरेशन ऐसा होना चाहिए कि जो डिप्लॉयमेंट है that is spread across a period of time, say for the period of next 2 years अगर यहाँ से डिप्लॉय किया जाता है, so that will be a reasonable time कि जहाँ पे प्राइस as well as टाइम करेक्शन भी कंप्लीट हो चुका होना चाहिए. So व्हाट आई एम सेइंग कि जो हिस्ट्री में हुआ है द चांसेस आर हाई कि ऐसा फिर से हो सकता है कि द करेक्शन में नॉट बी टू द एक्सटेंट ऑफ 58%. इट्स नॉट, आई एम नॉट सेइंग दैट कि 58% का करेक्शन आएगा. व्हाटएवर इज द करेक्शन, द ड्यूरेशन ऑफ करेक्शन एंड द क्वांटम ऑफ करेक्शन कैन वेरी. से हो सकता है कि जो प्राइस करेक्शन रहे 6 months 8 months के लिए रहे एंड टू द एक्सटेंट ऑफ से 15 to 20% रहे या 25% रहे, बट वी हैव टू प्रिपेयर फॉर दैट फॉल so that whenever the fall comes, the opportunity we should be able to grab it. कि वो जब करेक्शन आता है तो उसका बेनिफिट हमको मिलना चाहिए. एंड द बेस्ट वे टू टेक द एडवांटेज इज टू स्प्रेड द इन्वेस्टमेंट ओवर ए पीरियड ऑफ टाइम. नाउ कमिंग टू अवर परफॉर्मेंस कि हाउ वी हैव परफॉर्म्ड in the month of Diwali, in the month of November, we have given recommendation, we have given Diwali picks. Let's see how was the performance of our Diwali picks. The first stock was Bajaj Finance. It was given at 3491, 3491. The year-end closing was 5295. The absolute return of 52% in span of 2 months, 1.5 months. Sorry. Britannia from the level of 3400 to 3576, 5% absolute return. Canfin Home, 8% return. ICICI General Insurance, 24% return. IPCA Lab was the only stocks which delivered negative return. IGL Inripus Gas, positive return of 23%, Ultratech Cement 16%, and Whirlpool 29%. So equal investment in the stocks, say 10,000 rupees each, the absolute return is 19%. Now, if we compare with the Nifty, Nifty have delivered return of 18% and Nifty next 50, 18%. Now, in this time when most of the mutual funds and the large PMS houses are struggling to meet the performance of Nifty and Nifty Next 50, we at SRE Research have managed to outperform both the benchmarks in a span of 1 and 2 months. So this performance by any parameters is a decent performance. And I would request that whatever calls we are giving via Telegram, you can consider and you can suggest to your clients. Now coming to the SRE performance report, PMS performance, 5 years return, CAGR of 10%, 9.91, whereas benchmark have delivered return of 8%, CAGR of 8%, absolute return of 60%, and benchmark absolute return 47%. 3 years, absolute return 27%, benchmark 12.57, CAGR of 8.34, CAGR of benchmark index is 4%. 1 year performance 16% and 12%. 16% was the SRE PMS to absolute return and benchmark was 12%, CAGR 16% and 12%. Now coming to the delivery call performance. In last 1 year, from January to December, we have given total 71 positional calls. Open positions where 100% of the position, not even 50% of profit booked is 25. Out of this 25 open positions, the stocks which are in profit means from the purchase price, from the recommended price, the prices are trading higher right now at 21. The number of stocks which are above the recommended price is 21. Closing price lower than the purchase price or recommended price is 4. Open positions where 50% profit books are 14. 14 stocks where 15% to 50% profit is already taken, and the stop losses are modified to their entry prices. 7 stocks have seven stocks have triggered the stop loss. The number of stocks where full profit booked is 25. So if we see out of 71, we have 7 stocks with stop loss triggered. That means if we compare the percentage, 85% plus is the strike rate as of now. And the returns by any means, again, the returns and the performance is by any standard is above average. If we compare, this performance is above average, and the if we calculate the average profit generated by the each stock is average is 25% plus. So by any means, by any standard, this is a decent performance, and the positions which we are recommending via Telegram, that can be considered. Now, what is the process to avail the research update on Telegram? The client have to save this number 7666166 Send the client code on this number. You will receive a link on Telegram chat tab. After clicking the link, you will join the SRE research group for both daily and delivery calls. To receive only delivery call update, mention delivery call along with the client code. Example 123456. If the client code is 123456, just mention 123456 hyphen and then mention delivery call. SRE research update can only be received through Telegram app. We don't send research update on any other social media app. If you have any query, please feel free to contact at research@sre.co.in. Thank you.
Thank you, Nitish sir. That was a very, very good webinar and gave us a lot of inputs about how we should do things and what we should look at to be more important. Sometimes when we see opportunities and we see threats, I think now we'll be in a better position to take a call and probably keep our subconscious in check and not be swayed by emotions and other tips that we get in the market. So I hope this was beneficial to everyone. And if you'll want any other market update or have a specific deep dive into a couple of sectors or stocks, please feel free to get in touch with me. I'm available on LinkedIn, Facebook, Instagram, and you can email me on akash@sre.co.in. We can take it from there and we can solve specific queries regarding this seminar and probably future outlook. So thank you so much for attending today. It was a great pleasure having all of you all, and I hope to see you all next time as well. Thank you so much and have a great day.